a broker from San Francisco called me and said, been following your business for a while. Looks like you've got a super business. Could we help you raise some capital? And I was like, well, I haven't been able to pull this thing off and pull this to the table and get people I like to back me. So sure, knock your socks off. If you think you can do it, go for it. So I said he wanted an upfront fee, which scared the living daylights out of me because I didn't know if he could do it or not. But I said yes, because I couldn't imagine another way I was going to raise capital. So I said yes to a broker fee, and off he went. And must have been within 6 months of that first meeting, we closed our way bigger financing deal.
Wow. And so tell me about that financing deal. What was the valuation? What were the terms? That kind of stuff.
Yeah. So that deal was amazing. And what the broker was really excellent at was getting inside my head and helping me understand what a great investor in my business might look like. Because what I hadn't realized was there are all sorts of smorgasbords of capital out there. Mm-hmm. There's not one kind of capital. And I had no experience with the markets, and I didn't really understand venture and didn't really understand all the possibilities. And so he basically sort of got inside my head and came back to us and said, because you've got a great cash flowing business, I think your business could actually take on more debt than it currently has got. And we could consolidate the debt that you've got. We could do a big transaction. We could put a little piece of equity in and a really, really big chunk of debt. And actually then you won't need to give up very much for your company, and you could do a whole lot more before you need to raise more capital. And so that was what happened. We raised about $15-16 million, most of which was debt. A little bit of equity went into the business, and a big chunk of it went into debt, consolidated our rest of our debt that we had on the books, and helped us grow amazingly over the next sort of 12, 18 months post that.
The debt, that's super helpful. Was it more this venture debt where they had?
No, it was because they took a piece of equity of the company. They actually took equity in the company. It was what is classically called mezzanine debt. So mezzanine debt is debt that also is typically unsecured, i.e. it didn't have enough assets or buildings to collateralize the debt. Typically more expensive than normal bank debt, but not as expensive as giving away big chunks of your company effectively.
Can you recall what the interest rate was on it?
I think it was, people have, balked at the interest rate today. And I think that interest was like maybe 13%.
Wow. Okay. And roughly what time, what year was this?
We were in 2017.
2017. Okay. So this was really low interest rate era.
Yeah. But
so
this was high risk. This was high risk debt, right? So I didn't have enough cash flow to service my debt. So the debt was going to service the debt for a while until, our cash flow would catch up from building new camps. Because when you build a new camp, it's not instantly producing cash flow. Mm-hmm. So it was risky debt.
And what was the recourse? Were they, if you had defaulted on that debt, what were they entitled to?
Yeah, I think we had pledged our shares. So our shares were effectively our collateral on the debt.
Got it. So they lent this money at a relatively high interest rate. They also got a piece of equity. Do you recall how much equity they got?
I don't know what their percentage was. I can't really remember. I don't think it was huge.
What's that?
Less than 10 for sure.
Got it. So they got a piece of equity. They put this big line, debt facility on the business. And if you had defaulted on the debt, then they would have basically taken your business effectively or had the shares. Yeah. Did you personally guarantee that mezzanine debt?
Yeah.
Another personal guarantee. Okay, so you guys are all in.
Personal, meaningless guarantee.
Well, meaningless, yeah, I guess. But at this point, you've got a successful, profitable company.
Yeah, but Yeah, but that's really all I had. So we didn't have any other assets outside the business. We were broke other than the business.
I keep coming back to this idea because I think a lot of people, having had a challenging financial situation, would have reached, gotten back to a point of success and thought, I don't want to risk it all. And they become much more fiscally conservative.
Totally, but that's this game. I think that there's high risk and high reward, and low risk and low reward, and that is a reality. And I think, I've always often said that there's never been a better risk than I've taken than when I'm betting on myself. So, it's a lot riskier, I think, to bet on something else or someone else than it is to invest in yourself.